Hello, everyone. I'm going to be kicking off 2025 with a look back at Toronto's housing market in 2024. What are the key trends that stand out that made 2024 unique relative to previous years? Some of these issues we're going to be thinking about as we move towards 2025. In addition, I'm going to be looking at the annual stats for 2024, comparing them to previous years. I typically look at the monthly stats, but December's a pretty boring month. So I thought I'd look back at how the 2024 stats compare to previous years. My name is John Pasalis. My team and I help buyers and sellers throughout the Toronto area make smarter real estate decisions. If you'd like to meet with me and my team, just click the link in the show notes below or send me an email at askjohn@movesmartly.com. So before I kick into today's content, I thought I would just say a quick apology. I mean, I've been offline for probably about a month now. I have not posted a video or a vlog in about a month. I've been barely on Twitter for a month, and largely because I just decided to hit the brakes and basically pause and take a little bit of time off to think and write. Now, many of you who follow the show know that I talked about maybe earlier in December, the federal government was looking at exploring the role that institutional investors buying houses is having on our housing market. And I thought that this is a good opportunity to actually write a broader piece, not so much for the government, but for you, for everybody, that looks at what I think are these important issues, and specifically this idea that, you know, houses over the past 20 years have really transitioned to being a home for Canadian households, to being a financial asset for the wealthy. This is largely why we're building more homes, but our home ownership rate is plummeting. And I think this transition from houses as, you know, this affordable social rights to a financial asset and a means to wealth accumulation, I think is the more important issue that we needs to be thinking about. It's an issue that most economists don't really care about. Most Canadian economists, most politicians keep talking about that housing and housing affordability is just a supply problem. But it's a narrative that doesn't really make sense to me. If you look at the data, it doesn't really make sense. So I'm going to be working, I just finished, and I'm going to be kind of working on and clarifying a broader piece that I'm going to be sharing here eventually, probably in a few months or so, to unpack what I think are the issues that got us here, and many of the risks that, again, academia or at least Canadian housing economists aren't really talking about. Issues that are going to impact sort of this next generation. We're kind of Canadian politicians and economists are kind of creating a generation of renters who are shut out of our housing market. And this is going to have a very big impact on them, not just in the years ahead, but in decades in the future. And I'm going to be unpacking what I think are some of the important social issues that deal with Canada's housing crisis. So hopefully I'll have some more for you in the next couple of months. I need to clean it up, get some edits, put in some citations, and create a video for that. But in the meantime, we're going to look at the latest trends over the past year in 2024 for Toronto's housing market. So there are a few key things that stood out in 2024 for me. The first is that the year actually started quite hot. The year started relatively competitive, quite a few offers on homes. Low rise is busier than condos, but it was still a relatively busy market. And then by the second half of the year, the market just hit the brakes. The market cooled dramatically. For condominiums, demand slowed down significantly. Even houses demand slowed down. In neighborhoods that where homes would typically get multiple offers, demand just fell off a cliff. Houses were sitting in the market a lot longer. Far fewer homes were getting bidding wars. So it was a very interesting transition from a market that started hot and ended relatively cool. The other issue were with new condo completions, something we've been talking about. I've talked about on this show. A lot of the condos that completed in 2024, many of them were not worth what investors paid for them. Some of them maybe down only 5 or 10%. Some of them worth 20% less than what the investor paid. So you got to imagine the investor bought these pre-construction condos 5 years ago for $1,500 a square foot, but they're closing today, and in today's market, they're worth only $1,200 a square foot. And that's largely because we'll look at some stats up ahead. that condo prices in the resale market have largely been flat for 4 years, so prices have not increased. So many investors are seeing that their condos aren't worth what they paid for them. Most of them are closing. A lot of banks and our banking regulator, OSFI, are basically turning a blind eye to the fact that these units are not worth what people paid for them. They're giving many investors what are called blanket appraisals, which basically means they're pretending that the value of the condo is worth what the investor paid for it. If they did not do that, the investor would have needed to come up with a lot of additional capital to cover the shortfall in order to get a mortgage. That hasn't been happening. But again, we'll see how that unfolds in 2025 because we're going to see more issues and a bigger spread between what investors paid and what units are worth. Rental market started to cool. We saw a lot of supply hit the market. We had a lot of completions in 2024, new condo completions. Many of those hit the rental market. Ton of listings, a ton of inventory on the market. And this is gradually putting downward pressure on rents. Showings for rentals are relatively slow. Things appear to be picking up a little bit, but again, it's a very sluggish market with a ton of inventory, and we're starting to see downward pressure on rents. Demand for micro condos has fallen off a cliff. Anyone who has tried selling a micro condo, a small condo, say 600 square feet, 500 square feet, that is geared towards investors. I mean, those units were getting virtually no showings in 2024. It doesn't matter how much you were reducing the price. There just wasn't a lot of demand. Again, many of those units are geared towards investors, but investors aren't buying these small units, partly because it's hard for them to get financing. Prices are not increasing. Rents are falling. The conditions are not really great for someone wanting to buy an investment condo. So those units are just sitting on the market, having a hard time selling. And many of them are just taking them off the market and just renting them. Some investors just don't want to sell for too big of a loss and are just taking them off the market and deciding to rent them. And those are some of the trends we're seeing in the condo market. And I'll wrap up by saying, and I touched on this at the beginning, that the market is mixed. To end the year, the market was relatively balanced for houses. It was not overly competitive, but definitely more balanced than it was for the condo market. Condo market was significantly slower. Small units in particular were sitting on the market for quite a while without a lot of activity. So we have these two markets behaving slightly differently. And I think they'll behave a little bit differently as we move into 2025. I'll follow up with another video on some of the things that I'm going to be looking at in the year ahead as well. But certainly the difference between the condo market and the low-rise market is an important one. So I'm going to take a look at the market update for houses. We're going to look at low-rise homes. I'm going to be looking at annual statistics. So this is looking at the number of sales of low-rise, that's detached semi-row houses in the GTA. Last year, there were about 43,000 sales, and that's up slightly over last year, but we can see it is well below historical levels. Sales were unbelievably soft. If we ignore last year's sales, which were below what we got, sorry, if we ignore 2023, which is slightly below 2024, we're pretty much at 20-year low. So 2023 and 2024 were pretty much at 20-year low sales volumes for low-rise houses. So very sluggish market. And I think the one interesting trend is that prices didn't really dip too much. I mean, they fell in 2022, but 2023 and 2024 were relatively stable. I think that was a relatively interesting trend given how soft the low-rise market was, and in particular with the increase in listings. Now, when we look at new listings, roughly 93,000 new listings for low-rise homes, a little bit below the long-term average, but not materially below. Again, the slowdown and the buildup of inventory was not driven by this flood of listings, but really was driven by the fact that, like I said, sales were at 20-year lows and allowed inventory levels to build up. So if you have a typical level of new listings, but 20-year low in sales, those listings will sit on the market a little bit longer. Another interesting trend, I mean, when we look at new listings for low-rise homes is that since 2012, I mean, if we go back further, even if I go back to 2006 or 7, the number of new listings is kind of gradually declining. I mean, we should be seeing this uptick in new listings. We've been, over the past 15 years or so, we've completed maybe 160, 170,000 homes, low-rise homes. So we should see more listings hitting the market just naturally, but we're not. And part of this we'll see in the slides ahead is that more and more homes are being converted to rentals, which is why we're not, even though we're building more supply, we're not seeing more supply in terms of new listings for buyers. And of course, our population has grown quite a bit over the past 10, 15 years, and yet listings volumes have not edged up, they're edging down. When we look at sale prices, low-rise homes, 1.35 million, pretty much flat over last year. Again, down a little bit since the peak in 2022, but pretty much flat over last year. And again, an interesting development given how soft the market has been. If we look at the condo market, again, sales 24,000, down over last year, about 2%. Below sort of the historical trend. Again, not quite, I mean, probably about a 10-year low for condos, not quite a 20-year low the way it was for houses. So again, a soft demand for condominiums. But the things that make condos a little bit different than houses is that new listings was actually quite strong, 66,000. Again, highest new listing volume. So we're seeing a lot of new condo listings. And again, part of this is sort of more recent completions. Part of this is just investors wanting to exit. And this is contributing to the relatively high inventory that we're seeing on the condo market. And when we look at condo prices, they are down 2% over last year, about 723. And if we look at a longer trend, like I said, since, over the past 4 years or so, condo prices have not increased very much, and this is partly why many of the new condos that are completing that were paid premiums 4 years ago are not worth what investors paid for them. So I'm going to take a quick look at the rental market as well. I typically only look at condos, but we'll look at houses as well, just to look at some year-end statistics. When we look at the number of rentals for low-rise homes, that is pretty much flat over the past few years, but we can see again this massive increase since 2012, far more low-rise house rentals. And when we look at the volume of new listings of houses for rent, again, this has been increasing significantly. We're just under 50,000. In 2012, we're about 14,000 house listings for rent on the MLS system. So again, a rapid acceleration, more homes being converted to rentals. And of course, this is eating into the supply that buyers can buy, which is contributing to higher home prices. When we look at average rents for condominiums, for houses, 3,300, pretty much flat over last year. And when we look at the condo market, rentals are quite high, 50, 60 plus thousand units rented last year. So even though we had a lot of inventory, rental demand is actually still quite high, well above last year and well above 2022. When we look at new listings volumes for rentals, over 93,000, and a very high volume, higher than any previous year. And of course, it's this high volume. I mean, if we look at, 2019 had just 50 something thousand units listed for rent. So we're at 90 plus thousand this year. A huge transition. Far more condos hitting the rental market. And again, this is what's contributing to the slowdown that we're seeing. And when we look at average rents, they are down slightly, 27.75. Again, dipping slightly over last year. Again, largely driven by the surge in inventory. I hope you found that helpful. If you have any questions, please post them in the comments below or shoot me an email at askjohn@movesmartly.com.